Hello, and welcome back to Equity, TechCrunch's flagship podcast about the business of startups. I'm Marianne Azevedo, and this is our Wednesday episode where we hone in on a trend in the startup world and dive deep. Joining us for today's conversation is Sara Deshpande, general partner at Maven Ventures, a seed-stage venture firm investing in tech companies addressing emerging consumer behavior and trends. It has $200 million in assets under management across 5 funds. That includes 4 seed-stage funds and 1 opportunity fund. Sara, welcome to the show. How are you today?
Thanks, Marianne, for having me. I'm doing great, and I'm glad to be here.
Yeah, super excited to have you here. So first off, I understand you've been with Maven for 10 years. You were actually the firm's first employee. Is that correct?
Yeah, that's right. When I joined Maven, Jim Scheinman had just started the fund. He had a successful career as an operator, executive, founder, mostly within the consumer tech realm, and started Maven with the idea of investing in the exact same kinds of companies he was advising or investing in as an angel and as a founder. And he started and ran the fund for only about 6 months. It only raised about $5 million at that time, really at the beginning of the micro VC movement in 2013, and realized if he wanted to launch kind of a true venture fund that was going to last for a decade or more, he wasn't going to do it alone. And so had started looking for somebody to come and join the team full time. And the two of us met and hit it off pretty immediately. Actually, within 24 hours of our first meeting, I was looking back recently as we kind of came around that 10-year anniversary at the email that I sent him kind of saying, hey, I'm like all in, let's do this. The two of us started working together almost immediately in 2014. So now it's been 10 years since the first employee. And as you mentioned, we've grown to 5 total funds, including closing our most recent 4th seed fund and about $200 million under management that we've grown the platform together over the last decade.
That's really cool. I mean, there's been a lot of turnover in the VC world these days, so it's kind of refreshing to see partners who have worked together for so long and seem to be just going really strong. So you closed on a $60 million fund that was announced in April. Christine Hall covered that. And I learned a few things about Maven at that time. So you actually have backed the likes of Zoom and Cruise. So wow. Since your seed stage, that means obviously you invested very early into these companies. So, wow, those were kind of big hits for the firm, I take it.
Yeah, absolutely. I think, what Maven's best known for is identifying an emerging consumer trend and trying to find an area of technology that we think can have a massive impact on people's lives. Then can we identify these founders really early on that we think have the potential to build a truly iconic business and really just work with them to help unlock that potential to build this iconic company. So we were very early investors in Zoom as well as Cruise Automation. Prior to raising Maven Fund 1, Jim was actually an early advisor to Zoom, and he's now well known for actually having named the company Zoom. So back in 2014, we were doing video calls way before it was in vogue, telling people to meet us online and meet us on Zoom. And so, yes, both 2 very early investments that have done really well for Maven and for our LPs. And I also think really highlight that broad lens on consumer, Zoom being kind of the beginning of face-to-face video and the technology to make that possible. Cruise Automation, one of the first companies that brought, autonomous vehicles to the world. So very different trends, very different categories, but always kind of that unique insight around a new technology and a new opportunity to invest really before hypergrowth.
Yeah, one of the statistics that Christine reported is that 16% of your portfolio companies have reached a minimum $500 million exit or valuation, which is about 10x industry average. So yeah, that's impressive.
Thank you. We're grateful that our funds are really kind of top decile, top of the marks, especially those early funds across pretty much any metric. And I think there's a few reasons for that. And, we do try to identify these emerging trend areas where we think there's a big market opportunity and something that is positioned for hypergrowth. And another piece of that is raising a fund that allows for a $500 million exit can be a massive winner for a fund of our size. And so building a concentrated portfolio where you can really work with those companies and they have the potential to be that kind of iconic consumer home run and kind of return the fund at those multiples. So we've had, now multiple $1 billion plus exits, multiple $500 million plus exits, and many companies within the portfolio that are kind of at that $500 million valuation or more. And we've only made about just over 60 investments in the last decade. So we keep a pretty concentrated approach. So that high hit rate for us, we think is really a signal that if we continue to do what we've been doing in the past and kind of double down on the strategy that's been working, we'll be able to continue producing those types of returns.
Yeah, it sounds like a focus on quality over quantity. And earlier this year, a couple of venture capital firms kind of came out, not against consumer, but saying that they were pivoting away from consumer tech. Andreessen Horowitz, Lara Hipal. I may have pronounced that firm's name wrong, and if so, apologies. But I know this kind of sparked a social media debate about whether there's still opportunity in consumer. And from where I sit, it feels like if I were Maven or firms like Maven, that would be like, okay, cool. That gives me more opportunity. If you don't want to invest in consumer, it gives me more room to back companies in the space. So, and I think your partner said it's less noisy. There's a lot less competition. Is that how you feel, how you see it?
Yeah, absolutely. I think there's a few things that continue to work and really validate our focus on consumer. The first is that consumer goes in and out of vogue all the time. It's very cyclical. Other funds say we're in. Consumer is the new, multi-billion-dollar outcomes. Now we're out. We're not doing any consumer. We only want to do, B2B SaaS. And so now a decade at Maven, 15 years working with startups, I've seen this ebb and flow. And so consumer does tend to go in and out of vogue. And so I think that there's really real value in continuing to focus on it all the time.
Yeah.
In a time when others think it's out of vogue, it's actually a great time to be a consumer investor for exactly the reasons you mentioned. There is less competition and less noise from others. And what we hear from founders is that when they meet with other investors, they're often asked, and like, hey, what's your B2B strategy? How could you move this to enterprise? And when they talk to us, they say how refreshing that you kind of see and share a consumer vision. And so I think that kind of orientation is something that persists for us. And that's really helpful. The second piece of that is, in 2014, what consumer meant then is really different than what consumer means today. We used to invest in a fair amount of mobile apps, and kind of at the beginning of the mobile app ecosystem, of course, that was a lot of what was happening in 2014. And while that still does persist today, there's been a huge evolution of business models as well. And so now, if you look at things like Zoom in the portfolio, which I think most enterprise investors would be thrilled to be an investor in Zoom, but there was no more consumer company in 2020 than Zoom. And so we do have a fair amount of diversity across business models, especially in something like health and digital health, which we've been investing in since 2015. The healthcare ecosystem, for better or worse in this country, is not truly a consumer-led ecosystem. So if you want to invest there, you have to also invest in B2B2C or B2B business models with a major consumer trend and a major consumer product. But there might be a fair amount of diversity of the actual business model and the way the money changes hands. And so I think our lens about consumer really persists over time, but gives a fair amount of autonomy to find the right opportunities that can get very big.
Yeah, I have noticed that your firm's investments thesis has evolved over the years. And then in those early days, you backed like Cruise, Embark, May Mobility, and combined, those companies are now valued at over $30 billion. And then you mentioned started moving into more of the digital health space, and you invested in Hello Heart, I think in 2016, which subsequently raised over $130 million, a digital coaching app to manage heart health. So one of the things, as you pointed out, that I find intriguing is I think when people think of consumer, the first thought is, oh, okay, it's like consumer goods, like, okay, buying razors or, things like that. And it's kind of, I don't want to say a misconception, but consumer, as you mentioned, is so broad. And when we talk about digital health, it's very different than just like products that people, buy. I mean, health is crucial, right, for everyone. So we're talking about improving our health. So I feel like that's where consumer can be a little bit misunderstood, I guess, because health is not something that we're worrying about going out to buy because we want to buy things like razors, but more like things that we really need to be improved upon to help us live healthier and longer lives. So I know you've personally, I think you led investments in a bunch of companies in the space like Daybreak Health, Hello Heart, Carrot Fertility, Nest Genomics, Wild Type. I do find that intriguing, and I do feel like people just don't necessarily include health when they think about consumer. Would you agree with that?
Yeah, I think that's a really smart point. In any area that's misunderstood, if you have a knack and a capability and a skill set there, that's a great opportunity. And so when we're looking for something in digital health in particular, it is looking for, something we're technology investors first and foremost. So we invest in technology companies and tech companies that are addressing emerging consumer behavior and trends. So first it's tech. And then is this technology actually going to improve people's lives?
Right.
We now evaluate, hundreds of digital health companies. And the first hurdle we're always looking to get over there is like, do we really feel like this technology is going to improve people's health? Can this technology improve consumer health outcomes? And that has to be there. That's kind of table stakes to even evaluate an investment, to really feel like there's, the opportunity for this to have a positive impact on people's health. And then it's usually some insight around either a new technology or behavior and trend. You look at Care Fertility, we were early seed investors. It was one of the first venture-backed fertility companies. At the time that we were doing that investment, the sector hadn't really grown to what it has now, not only fertility, but kind of women's health in general. You look at Hello Heart, which was a mobile app that helps to track and manage hypertension and blood pressure, really a pioneer of applying machine learning and AI to improve health outcomes. It wasn't called that back then, right? They were a mobile app helping to track and manage and give you recommendations for heart health, but that's what they were doing. And then, Daybreak Health, which is a company that helps improve mental health for teens. So that's a company we invested in 2020 when really the rise of mental health conditions of teens, particularly as they all moved into homeschooling during COVID, was really, really under the magnifying glass. So a company that has the opportunity to improve health outcomes there. So it's always a major consumer trend, always fueled by tech, and always something that we really feel like can actually help improve health outcomes for people. And we think that's where those market opportunities are. And also companies we're really proud to bring to the world and to partner with.
When we talk about seed rounds, are they bigger than they were a few years ago? About the same? I mean, in terms of size, what are you seeing in terms of overall size of seed rounds?
It's hard to draw a specific data point and a trend line on what it is. We've made now out of this new fund, we've made 11 core investments out of this new fund. And those seed rounds have ranged in size from, some pre-seed rounds, sub-$1 million pre-seed rounds, all the way up to kind of seed rounds in the $6 to $8 million range is not unheard of for AI companies to raise, seed rounds in that range. So I think for some companies, they are larger, particularly AI companies, and particularly if there is a multi-stage partner, a venture fund in the billions of dollars that's investing in the seed round. Those tend to be larger seed rounds, but there also are still a fair amount of those sub-$1 million pre-seed rounds, or sort of those $2 to $3 million, what I would call a more traditional seed round. We see both.
Mm-hmm. And outside of your portfolio, what companies would you say, in the health tech or AV tech market, are doing it right?
In the AV space, we follow that, I would say, slightly less closely. Now, we built our portfolio there in 2014, 15, 16, right? So we were really kind of at the forefront of those types of companies. And so now it would be highly unusual if we would invest in a company now, because there are established players there now. So there's not a seed fund that's kind of getting started there now, but it has been interesting to follow things like the, Wabi continuing to get funding for their company. So continuing to see hits like that are happening. So I think that's really encouraging for the space. I'm still a huge believer there. And then on the digital health front, there's so many companies that I think have done great things that aren't necessarily in the Maven portfolio. Things like, I think Headway was a real pioneer in trying to figure out how to make mental health more affordable and available to people. I think Maven Clinic really was a pioneer in kind of the women's health space, especially with the types of investors that they brought around the table. I think Work at Health has done some really great work around addiction and trying to bring substance abuse treatment to people. So there's a lot of companies that I admire in this space and think are doing great things.
When you're evaluating deals and you're seeing other investors participate, are you seeing other firms that are also very consumer focused, or more firms with a broader thesis that are also looking to back these sort of companies?
Yeah, it's very unusual to see a firm that has a lasting focus on consumer. It's highly unusual to see that. What I will say is, even the folks that you mentioned earlier on that maybe have gone away from consumer, when we talk to, friends and colleagues at those firms and others, what they say is, hey, if you find something that you think has that ability in consumer, we're interested. And so I think that the bar just is very high. I think the trends are hard to spot. The business models can be a bit unknown. The adoption and the timing of consumer preferences is so hard to predict. But I think there is appetite and interest in investing in these companies, for sure, across many seed funds, but it's very rare to find a specialist fund that, as the times come and go, that kind of retains that specialization.
Yeah, and I know you've written and shared about how your firm is kind of building this AI consumer portfolio, and you've invested in a number of companies that are considered to be AI startups, including x.AI, Elon Musk's company, a Perplexity, the bot company, Multion, is that how it's pronounced? Multion, yeah. Nuance. So, that's just, I think, a few of the companies that you've invested in the space. So how long have you been investing in AI, and how has that shaped your current thesis moving forward?
We've been investing in AI as an underlying technology for over a decade. We talked about Cruise. What that was really an application of machine learning technology within vehicles. And so I think today we'd call that AI, then it was called machine learning or big data. There were other kind of names for that, but our history is really kind of identifying these new trends in technology and these new tech capabilities and investing in whatever the consumer outcome there is. And so the thread of machine learning and AI and technology forward kind of frontier technology companies, that's been around for the entire decade. The shift around the ability of AI to reach into a consumer's life and solve a problem for them, that really was an awakening of the launch and the success of ChatGPT. And if you look at the growth of ChatGPT, their pace to getting to, the 100 million users, they're rivaling every other consumer company. And so we've been looking at these types of companies for years. Our biggest question was, when is the timing and when is the moment that the technology is right and that consumers are ready, that this can really achieve hypergrowth? And I think that ChatGPT moment in 2022 kind of was that awakening to say like, okay, now it's possible to start investing in these companies that we actually think can go all the way to a consumer and solve a problem for them. And so the kind of thread of AI investing covers many, many years. And the more specific, like when is the time to invest in consumer-oriented AI applications has really been for the last 18 months or so.
Yeah, I mean, obviously, we've seen a lot of hype in the space too. And this always happens whenever a particular category takes off. And we saw this, with fintech, like in the past. AI has just been crazy. VCs everywhere writing check after check into companies. There's some very overinflated valuations out there, even into companies that have like little to no revenue. So as an investor in this category, what do you look for in AI investments? And would you agree that this space is overhyped now? I mean, how do you weed them out? How can you tell which ones are actually really legitimately doing something revolutionary with AI compared to a startup that's just kind of saying that they're using AI just so that they will be noticed by investors?
Yeah, I actually think the peak AI frenzy was about 12 months ago as the technology was newer and really kind of entering the scene, and the intensity with which startups were getting funded at that time, the pace was so high. And I think now we've come back to a more steady state. I think the valuations can be still very inflated. These companies are raising a lot of money, but I do think there is more consideration and more diligence being done. And it is slightly harder for companies to raise funding, even for AI businesses today, than it was in kind of that peak of the AI frenzy maybe 12 months ago. So some of the things that we're looking for is like, number one, are you solving a problem for your customer? Is there kind of a unique consumer insight, some reason this needs to exist, some specific end problem that you're solving? So that's kind of one thing that we're looking at. And the second is really the team. Do you have a technical product-oriented team that's going to actually be able to deliver on that vision into this massive growing market? And so it's both. It's kind of like the vision, the insight, the problem, and a product-oriented technical team that can deliver on building a product kind of into that.
So would you say, I mean, I know that things were kind of frenzied in 2021, started calming down considerably 2022, more so in 2023. But I don't know if it's just me, but I feel like things have picked up in 2024. Even the summer's not as slow as previous summers have been. Are you seeing that where deal flow's kind of picking up again, just a little bit more activity overall?
Yeah, we've seen pretty consistent deal flow and activity now halfway through 2024. And I would say it's been pretty consistent and relatively high, but still affords the opportunity to spend time with companies and really consider them as a fit for the portfolio, consider whether you're the right investor for that company. Also, I think there is some value to the noise. People say, oh, it's so noisy. There's so many startups. I think there is some value to the noise because you have to see a high volume of companies and ideas and founders to sort of calibrate where are the unique opportunities. And so when we're thinking about like, where do we see future consumer AI opportunities, we're always dreaming of our own ideas. And I want to meet every company in that space. I would meet 30 founders working in that category to see if there's some unique insight to tease out some kind of unique founding team. And so I don't think the noise is all bad. I think seeing a wide range of companies is really important to our jobs.
What do you see ahead for the next year and a half or so in general with consumer investing and also in particular AI?
I do still think some later stage companies that maybe raised in the peak of 21 or early 22, those are still working their way through the system. So I think we'll continue to see what happens with those later stage companies. And then at the seed stage, I think the ability of AI to improve life for consumers and do something for them is going to get here much more quickly than people think. We're investors in Perplexity, which you mentioned, which I think is one of the first examples of a truly magical consumer experience that does something for you, that gets you kind of all the way to an answer. And that's just one example. The other categories we're looking at where I think we may see things for sure getting launched this year are in how do we use AI to kind of make things that were available to the 1% available to everybody? Like, can it be a unique affordability and access technology where things like concierge doctors can now be available to everybody? Longevity is now something that's available to everybody. A truly personalized financial manager that was only available to ultra high net worth individuals. Can AI technology make that available for everybody? So we're kind of looking at those frontier areas and trends around consumer AI. And I think AI still has a lot of power in social. Like, what are consumer social photo and video applications that are going to be improved by AI? And so I think we will see, my prediction is that we will see more consumer oriented technologies, more agentic AI companies that can act on consumers' behalf, more health opportunities in consumer AI, and really looking at where are the areas where that technology can have a really big positive impact on people's lives. So that's my prediction for what I think is coming this year.
I think one thing, though, obviously there's been a lot of controversy too in AI, and I know Perplexity in particular has been accused of things like ripping off content, accused of plagiarism, things like that. I mean, there's a fine line, right? And how do you think companies can address this ethically and responsibly? Because while AI, it's amazing and it does a lot of really cool things, there are concerns around this in terms of ripping off content, and particularly, I know Perplexity has been sued, things like that. I mean, what are your thoughts on that? How do you make this better and not happen, I guess?
Yeah, absolutely. I mean, it is a technology that is bound to bring controversy and opinions on every side of, the pros and the cons. My perspective is we are still so early that the rules are being written right now. I think companies like Perplexity, they want to bring a technology to people that's going to improve their lives and do, something positive with that. And figuring out the rules of the game, it's just happening right now. It's so early. And so I think that there is going to be probably continued turmoil. We're going to be on a roller coaster for a while of these companies figuring out how do they live in the world and solve problems for consumers and solve problems for enterprises and harness this really powerful technology. I think there's going to continue to be, ups and downs. There's going to be a roller coaster kind of navigating that because those rules are being written right now. And so I just think it's a natural kind of tumult that's going to happen. And our hope is that companies really have the end consumer in mind. They've got the ethics in mind, that they've got the perspective that they're trying to do right by their customers, do right by their partners, and kind of get to the other side of what is just a technology that is changing things so drastically that there are, a lot of different viewpoints and considerations. So I think at seed stage in the type of investing we do, analogy I'll use with founders sometimes is the reality is the boat is always rocking in these private companies. And, sometimes it's the weather and sometimes it's the boat and sometimes it's the captain and sometimes you have no idea what it is. And so the boat is always rocking, and that is natural for companies, and it's amplified by the power of this new technology. And so I think it's a period of time that we will just have to get through.
Yeah, I think while we were on this call, OpenAI just announced GPT-4o Mini. And so one of the things that I've been hearing is okay, well, OpenAI just keeps coming out with stuff that potentially kills what other startups are building or doing. So is that a concern for you as an investor? I mean, do you sit there and think to yourselves, okay, well, this company looks cool, but in 6 months, OpenAI could come out with something and just totally kill what this company is doing?
I think it's happened enough in the market that, of course, that has to be a consideration and, and a possibility. And the way that we get conviction and enthusiasm to still invest is, number one is I do think a focused team solving a specific problem with a unique insight, working on one solution has an opportunity to win. Startups have so many disadvantages, but focus and speed, could be a real advantage. And so I think a company that's really going to have that unique insight and the focus on solving one specific problem. And then the second aspect is there will be many companies that have to pivot because the OpenAI, now the kind of incumbent in the space, does something that they're doing, and a really technical early stage team with great product insights will have to figure out what to do next when that happens, because I think it is bound to happen. And so then it really kind of goes back to that strength of the team is, can they double down and kind of find some unique insight there?
Mm-hmm. Well, before we wrap up, is there anything else that you want to say or any prediction you want to make about what's next for consumer?
Yeah, the last thing I'll say is the consumer companies that are starting right now, I think have the potential to be much bigger than we can even imagine. And so it's a great time to start a consumer company. It's a great time to be an investor with a really specific consumer specialization and orientation. And I think that these companies can have such a big impact on people's lives and just can be so much bigger than we imagine. And that's happening right now. We're all consumers and we can touch it and feel it and see that change happening. And so I think that there are companies that are being built right now that are going to be those kind of iconic names of the future, the Zooms and Cruises and those iconic companies of the future. And my hope for Maven is that we continue to get the chance to partner with those founders and be part of those journeys. And I think these companies will be bigger than we can imagine. And the opportunity is really exciting.
Well, Sara, this has been really fun. Thank you so much for joining us today. We're going to have to wrap it up now, but Equity will be back on Friday. Until then, you can find me on X, Bay Area Writer, and Equity under the handle Equity Pod on X and Threads. And Sara, where can our listeners find you?
They can find me and Maven both on X. I'm Sara_Desh, and Maven is Maven VC. You can also find me, Sara Thomas Deshpande, on LinkedIn.
And to be clear, Sara does not have an H on the end. It's just Sara, correct?
I so appreciate you asking that. My entire life, I've always, had to remind people Sara, no H. So thank you.
Right. Yes. No, of course. And to our listeners, don't forget to check out our sister show, Found, which dives deep into the stories behind startups with the founders who built them. Thanks so much for listening. And thank you again, Sara. Bye-bye. Equity is produced by Teresa Loconsolo with editing by Kel. Bryce Durbin is our illustrator, and we'd like to give a big thanks to our audience development team and Henry Pickavett, who manages TechCrunch audio products. Thanks so much for listening, and we'll talk to you next time.